There you go.
Hello traders, Cousin Vinny coming to you from theclosingprint.com on Sunday, December the 2nd, 2018. In this edition of your weekend video newsletter, we'll discuss the indices, where they might be headed. News aside, the indices all closed higher last week, substantially, reversing from the previous week's drubbing. We have the bond stock ratio, short-term, intermediate term, and long-term bullish. The caveat is junk bonds and high-yield corporate debt. Of course, that needs to pick up a bit to give us a better read on a risk-on market. We already have IWM and biotech improving. So those two of three components of the risk-on trade look good. Dow Composite creating a W pattern like we see on many of the big cap stocks we talked about this weekend. Check out the Saturday Post. In addition, we have the S&P 1500 on a buy signal. All of the leaders moved higher, as you can tell with the NASDAQ and the NASDAQ equal weight index. The NASDAQ beat out the equal weight substantially due to the heavier weighted stocks doing so well last week. Sentiment is mostly bullish. The NASDAQ did form a bearish cross at the close, so that's most likely due to traders taking profits into the weekend. SPY weekly looks very strong. It wouldn't take much to get back above the 50-period moving average here. RSI is rising. Rinko continues to build white bricks. The cycle is up. SPY daily on this unadjusted dividend version of the chart closed just at the 200-day on Friday. We also saw a lot of after-hours blocks trading above 276 all the way up to 276.20. There was quite a bit that traded there. I talked about that in the weekend blog post as well on Saturday. Make sure you check that out. We have tick cumulative still grinding higher, and if the news is perceived as bullish coming out of the G20, then we should see this continue to move higher and attack this 281 level in the short term. Early in the week, we talked about the spiders and the NASDAQ cycles, how they had hit extremes and looked like they were near a turn. The follow-through is now becoming very obvious with the news out with China. Potentially, we could see this cycle continue higher. These W patterns on many of the indices continue along with big cap stocks as well. Take out the middle part of this W would be a confirmation on a breakout, which would lead to the potential retracement back up to 52-week highs on most of, if not all of the indices. We can see the same thing on the Dow Jones Composite. This is 65 stocks from the industrials, utilities, and transports group. This is Dow theory basically. When industrials produce products and durable goods, the transports move these products to their destination, and the utilities help fuel those deliveries. We have W patterns showing up a higher low at the end of November. Following through, wouldn't take much to push us back to this 86.64 level, along with RSI rising and MACD above its signal line. Stochastic is in the red zone. However, we did see above average volume on this index as well. So watch your transports and industrials this week. I know a lot of you have already did some homework this weekend. I see Lee Star talking about Caterpillar, among other things. Watch Boeing as well. If we strike a deal with China that the market likes, then we'll see a follow-through this week into the last month of the year. Seasonally the strongest month of the year in most cases. S&P 1500, this looks like a buy signal and a confirmation now. We have the histogram pushing above the 2% line that we've seen in the past, lead to follow-throughs. We had a little bit of a mixed signal going into the middle part of November. That's where we got that W pattern, a buy signal, flat, and then another buy signal. So look for a follow through. I know Sundog, you're watching this as well. W pattern on the S&P 1500. Of course, this is the S&P 500, 400 mid caps, and 600 small cap stocks, comprising a broad measure of market participation. With the index moving above the 20-day, not too much further to move to take out this W pattern and confirm a bullish breakout. Last week, most sectors improved. We see IYR nearing the highs. These REITs were doing well. A lot of them look good this week as well. Transports moving above the 50-period moving average looks strong, as we already alluded to in the Dow Jones Composite we talked about earlier. Look for that to continue higher for transports, industrials, and utilities. We also see the communications sector, energy, and XLF improving somewhat, with XLE faring the worst out of the price action last week. XLI, XLK, and XLP, with XLP nearing the highs again. A defensive sector. XLI industrials look pretty good, moving above the 20-day. Looks like it could move above the 50. We also have utilities near the highs. Do we fade near these highs on the news? We'll watch for that as a potential reversal. And XLV near the peak that we saw back here in September, with a big move on Friday, if you were paying attention. We have a trade on XLV. The healthcare stocks look pretty strong. No Bollinger Bands are opening up top and bottom. MACD is above the signal line. The cycle is up. MACD histogram is higher. Volume increased. We're looking for a follow through in healthcare stocks this week if this continues as well. Consumer discretionary also improving. We're seeing that definitive W pattern going into the last month of the year. Retail should continue to improve. Look for consumer discretionary industry groups to follow through, get above the 200-day, test this level at 112, and follow through to 118 towards the end of the year. If the holiday season is perceived as bullish, these stocks should continue to move higher. We also see the ratios between XLY and XLP, the consumer discretionary to consumer staples, moving off the lows, W patterns. These could reverse. You have the reverse over here as XLP, XLY at highs, moving lower. If this starts to move lower, that would be bullish for equities, as a bullish market should see consumer discretionary outperforming consumer staples in the short and intermediate term. Therefore, bottom line, we could see consumer discretionary outperform and consumer staples, the safety trade or defensive trade, start to unwind. Stocks like Procter & Gamble, Colgate, Palmolive, etc. Keep an eye on those. See if they pull back in at all this week as consumer staples nears 52-week highs once again. Here are some stocks from the MarketSmith Growth 250 that are showing relative strength line climbing at 93. This one's breaking out. Amphastar Pharmaceuticals, another pharmaceutical name that's mysteriously looking very bullish. Timeliness rating of A. It has some pretty decent numbers here. Looks like it's breaking out above that 2165 level, 2172 at the close. Look at the volume, telling us something is up. Earnings out in March, so you don't have to worry about that. American Waterworks, I believe one of our newer members, Michael, mentioned this one a couple of weeks ago. This continues to build higher highs and higher lows. Broke out on Friday, the highest volume that it's seen since the base formed on the breakout. So most likely this one will continue higher. It's in the utilities group. Relative strength line is climbing at 89. Brixmor Property, BRX, breaking above the 50-day and the 200-day last week. Relative strength line climbing above average volume, the highest volume since its base. Look for a follow-through and a test of 1871 in the short term in this REIT and real estate industry group name. Capital City Bank Group looking good. CCBG is the symbol. Looking like it's going to break out. It's flagging presently. just above the breakout zone. It's in the buy zone as well. Relative strength line climbing, volume increasing, the highest volume it's seen since it formed this base. If financials follow through, a lot of these banks will follow through as well. It operates through 59 banks and offices in Florida, Georgia, and Alabama. Guess following through, broke above 2301 last week, forming the right side of what looks like a cup. 27 is the target, short term, volume increasing. We had earnings, a beat of a penny going into the holiday shopping season. I know my wife likes to shop here as well. World Wrestling Entertainment once again formed the base right at the 200-day. Brother Bill was all over this one this past week. If you've been following his trades, I believe he was using options. Looking very good. Bill, congratulations. We're right at the 50-day moving average. If we flag, is what I am anticipating, we'd look for a follow-through this week. Earnings are forecasted to continue to improve. Above average volume coming off of the 200-period moving average and relative strength line climbing. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter on December the 2nd, 2018. We'll send out a watch list later tonight around 11:30. So look for that in your inbox. Get out there, enjoy the rest of the weekend with your family. I hope this helps. Take care, and we'll talk to you soon.